This is Business Incorporated on Channels Television, and we're glad to have you. On the show today, London Stock Exchange Group declares 13% jump in its first quarter profit. And Atlas Mara appoints new chief executive. Plus, Nigeria's largest company by market capitalization, Dangote Cement, rejigs board of directors with new appointments. I am BC Adebayo in Lagos, and let's get the show started trading some of the big markets on the African continent. Here in Nigeria, the all-share index is looking good at intraday with a 0.42% gain. In South Africa, the broad GSA index was 0.27% positive, while Egypt's EGX30 index was rallying around 0.46%. In East Africa, the Nairobi Stock Exchange finished Monday 1.13% lower. And in the Middle East now, the numbers are bloody at lunchtime with all the indices in the red. In Abu Dhabi, the stock index was 0.2% lower, while the Dubai index slipped almost 1% at noon. The Qatar Exchange was also down 0.72% around midday. In Saudi Arabia, the Tadawul Stock Index was 0.17% lower, also at intraday. And in Europe, the markets are slightly higher today as investors monitor the latest corporate earnings flickering into the market. Well, let's talk to Conrad Busen, who's standing by at the Frankfurt Stock Exchange for details. Hello, Conrad. It's good to see you.
Good to see you too, BC. Hello, Nigeria.
Well, can you begin by telling us about the key details and conclusions of the new Euro Area Bank Lending Survey just released?
Well, BC, the European Central Bank said today that banks in the Eurozone expect demand for corporate loans, consumer credit and mortgages to grow in the current quarter, and credit standards were easing. That's the bottom line of the survey by the European Central Bank among 149 banks here in the countries of the euro. Of course, the largest ones, the most systemically relevant. What's important to note is also that this easing of credit standards has only slightly to do with the consumer's business, with mortgages and also with credit cards, but that this was mostly due to more risk friendliness of the banks with lending to enterprises in the corporate banking business. Here the European Central Bank says that competitive pressure was high and risk perceptions are so that banks were saying, well, let's be a bit more generous when it comes to giving out loans. That's of course positive in terms of economics. It shows that the extreme monetary policy by a central bank that has the target to increase loans and increase the amount of credit given out to the economy, that has the desired effect. But of course, the sword cuts both ways. There is another side to this. Fueling growth with too much debt, too much leverage can become a problem. And we are seeing this also in the Eurozone. Remember how often we have talked about the bad debt that many of our banks are still sitting on, especially in Greece, Portugal, and also in Italy. The total amount of bad loans that banks are sitting on is 759 billion euros. And here the European Central Bank at the moment is considering easing the rules according to which those bad loans have to be treated, something that is very much criticized here in the Eurozone at the moment. Banks should not become too relaxed and should not become too generous. There is a risk in that.
Now let's talk about the German Business Confidence Report, or the IFO, which came in at 102.1 today. Speak to this data for us in terms of where the German business sector is heading.
Well, the IFO Institute says the high spirits among German businesses have evaporated. And look at what the German share index DAX has been doing today. You said quite right that the market started in positive territory, but in afternoon trading, the German index is losing all of those early gains. And this means the mood here on the trading floor has also evaporated in the course of this trading day. This IFO index has been reformed by the IFO Institute. Not only does it describe business sentiment in the German construction sector and also in German manufacturing sector, but for the first time in the month of April, also the big sector of services here in Germany is included. It didn't really help. As you said, the overall index has come down somewhat, and that's of course something that is causing concern on the trading floor. People here wonder whether the choppiness in terms of business sentiment and also in terms of hard economic data we've seen during the first quarter might continue into the second quarter. We also got negative news today from France. The INSEE Institute in Paris, which is the equivalent of the IFO Institute here in Germany, the INSEE came out with the French Business Climate Index, and that is down as well.
In the meantime, Conrad, the UK has reported a budget surplus. How will this news fit into the Brexit conversation and arguments on both sides?
Well, it probably serves as an argument or as some argument for both sides. I mean, both sides could say, this is good news for us. The Brexiteers, of course, can say now the government in London has managed to come in with a small budget surplus, even despite all the uncertainty in terms of the economy. And also, given that in the future, after the United Kingdom leaves the European Union, the contributions of the UK that are at the moment paid to the European Union will not have to be paid. They can be used for further consolidation of the UK budget. Brexiteers and pro-Brexit people in the UK might say, well, the future outlook for the surplus and for the budget is positive as well. On the contrary, people who are not so much friends of Brexit, many of them here on the European continent, have the right to say that this is rather naive. The outlook for the UK's economy is very choppy, very insecure, and it's not a given that the future budgets in the UK will come in positive as well. And also, people I talked to here reminded me how much a price the Brits are paying for the fact that the UK government can post this positive budget. I mean, public services in the UK are really, generally speaking, not in a very good state, and they are also expensive. And this is not something that is bound to change in future if the UK's government wants to come in and wants to further consolidate its budget.
Thank you, Conrad. Enjoy the rest of your day.